many people don't even realize its importance until they come to borrow money and the computer says no. In this video, I'm going to give you 3 things to really help you improve your credit score. If you're watching for the first time, my name is Saj Hussain, and on this channel, I share with you my 15 years of property investing experience to ultimately help you get further faster in your own property investing journey. Now, in property investing, often we want to borrow money to be able to do projects, whether that's from private investors or whether it's traditional mortgages and high street lenders. Now, whenever we need to borrow any kind of finance, be it property or otherwise, most lenders will go and carry out a credit check. And essentially what that means, they review your financial history. However, they don't hold this information, so they go to third-party companies that do. And there's a handful of companies that have this information, but the 2 really big ones that the most lenders will use is Equifax and Experian. When they go to these credit agencies for this information, what those agencies are able to provide is a history of your financial activity, or your ability to be able to borrow money and repay on time. And if you're repaying your debts and your commitments on time, you'll have a great credit score, amongst other things that you put a tick in the box for to ensure you get a great score. However, on the other hand, if you're not so great with managing your money, you're missing payments and they're having to chase you for these, then that has a negative impact on your credit score. And your credit score is what the lender is using to assess whether they should lend you the money or not. Let's now jump into 3 ways to improve your credit score. The first one is to actually get the records that are already out there. So when we look at credit scoring and you end up with a number, the thing is with the numbers, it's an internal scoring system. So what that means is the score you'll get from Equifax versus Experian will be very different because it's a methodology that they're using to come up with a number of where they base you. So you need to review each of those records to see what's on them. But the only way you can do that is, first of all, access those records in the first place. So you can contact the agencies that have this information. We'll link up the various agencies in the description below, so it's easy for you to find them. But when you contact the agencies, what you're doing is asking for your credit file so you can have a look through the data that's there. But there's 2 ways to get that. You can either sign up to some of the offers that they have, where they have the data available with credit scoring and suggestions for you. And often you have to pay for that service. Sometimes you might have a month subscription for free, initially just to get a feel for it. The other way to get that data is under the Data Protection Act, where you can ask for a copy of the data that any organization holds on you. So they can send this out, but that data tends to be in its raw format and can be quite difficult to interpret. So if you are able to use the service that the credit reference agencies provide, the data is in a much more presentable format and easier for you to understand. You may have heard people talking about after 6 years, things fall off your credit file. Well, strictly speaking, this isn't true. What actually happens is when lenders carry out credit checks and credit searches, they're looking at your last 6 years history. So if things are more than 6 years old, they're still on your file, but generally speaking, the lenders are not actually looking at those things. So it's the last 6 years of data that's really important that you want to look at and want to check. When you get your files, what you'll see is there's various different lenders that may have carried out credit checks, and they leave what's called a footprint. A footprint is a record to show that they actually examined or looked at your credit records to make an assessment around credit for you. So that record stays in. You can see who carried out that search. And there are 2 types of searches, what we call a soft search and a hard search. The soft search is often when they're just doing an identity check or an address check. For example, if you're taking out car insurance, they might do a soft check just to see whether you're a genuine person, they can match your records and you actually exist. This doesn't really have any major impact on your credit file. Essentially, all they're doing is trying to match you up and ensure that you're a real person and carry out an identity check. On the other hand, a hard search is one where they've actually looked at your records in order to make a decision around credit and lending, and these are the ones that are important. Once you've completed step 1, you've got your records and reviewed them, the next step number 2, is to do some housekeeping on those records. How do we do housekeeping? What, do we get the broom out and start sweeping it? No, not quite. But what we're looking to do is see what's already on those records that may not be correct, and what things we can improve to really present a better picture or the best picture that we can in terms of that credit file. So the things we're looking for is anything that might have a negative impact. If you think about what a lender does when they look at your file, essentially they're assessing your ability to be able to repay money, i.e. borrow money, repay on time. stick to the terms that have been agreed of how much needs to be paid, when it needs to be paid by. They want to check how much debt you already have that you're servicing, that you're carrying, and also things like your identity, check does it match your address, how long you've been at that address. They look at things like whether you're registered to vote, and you might be thinking, I don't vote, I'm not interested in voting, I'm not registered to vote. However, it's a legal requirement to vote, so what the lenders do, they will try and match that up to see if it matches with your address. So even if you don't vote, it's important that you are registered, because these are the things that will help improve the credit score. The more things you can put a tick in the box for, the more beneficial it will be for you in terms of when they're reviewing that file. The first thing that you want to do with those records is look for anything that might be incorrect so we can get that rectified. For example, there might be an address on there that you're no longer at and it's still showing some records at that, so you want to make sure those addresses are tidied up. It may be that you've got a credit associated with somebody else. For example, you might have had a former partner where you had a joint bank account with, you're no longer with them, but you've still got that account running. All these things can have a massive impact on your file. You want to make sure all those things are tidied up so it doesn't have any kind of negative impact. Hey, if you're enjoying this content and you'd like to learn more about making money from property, then don't forget to subscribe to the channel where you will get a lot more great content just like this. If you have been in the unfortunate position where you've not been able to pay some of the debts where they're supposed to have been paid and the lender has taken legal action, for example, there might be a default on the account or there might be a county court judgment, that judgment might be settled or unsettled. These are all things that will have a negative impact. What is it that we need to do with those? Well, if it's a CCJ, if it's a small amount and you're able to pay it, I'd encourage you to get that paid so at least it's marked as settled. Otherwise, it looks like that they're about to take you to court to enforce his judgment and you've still refused to pay. So getting more debt in that situation can be quite difficult doing further borrowing. But if you show at least you made the effort to clear it, it can somewhat help in terms of how your file looks. Now, it's never going to be great if you've got a CCJ, a county court judgment, on your file. As much as you possibly can, you want to guard your credit file with your life, because once you've got these things on there, remember, you can't just make them disappear. They are there for others to see when they're carrying out credit checks. On the other hand, you might have some payments marked as late, where you've made a payment quite late. For example, it may be a mobile phone bill. It was supposed to be paid on the 2nd and you paid it on the 25th. It might still be on the same month, but it's still showing as a late payment. These are the type of late payments you can maybe call the lender or the provider and see if you can negotiate with them to take them off your file. So these kind of things can also help tidy up the file and make it look in a much more presentable light. So essentially, in housekeeping, step number 2, what we're doing is reviewing the file, making sure there's no errors and making sure we present it in the best possible light. Then step 3 is really where the magic happens. And this is where you work the system. By working the system, what I mean is by understanding what they look for and how you can tweak that so it's much more favorable for you. One of the things to look for is credit utilization. Credit utilization essentially means how much of the available credit you have are you actually using. So for example, if you've got a credit card with £1,000 limit, are you using up that, say, £900 of that limit, which means you'll say 90% utilize on that available credit, or are you using it and paying it all off? Are you carrying something forward to the following month? If you're paying off your credit card every month, you're, say, using your groceries, your fuel on the kind of things maybe you'd pay for on your debit card, but actually if you pay for them on your credit card, but make sure you've got the funds available to clear that each month, but only use a portion of your credit, that can really make a big difference. So let's put some practical numbers on that. Let's say you spend, say, £500 on grocery and £100 on fuel. You've got to be driving a nice car if you're spending £100 on fuel a month, but you're spending £600 a month on your card. Let me explain credit utilization. Let's say you have a credit card with a limit of £1,000. So you've got a £1,000 limit each month. And let's say you're spending money on groceries and fuel each month, which maybe would go on your debit card and just go straight out your account rather than putting it on your credit card. Because the aim of the game here is to demonstrate that you can borrow money and repay it based on the terms that you borrowed it on, i.e. on time. So let's say you use £200 a month on, say, food, and then you've got, say, another £50 a month on fuel. So that means you're using £250 a month off your account, which is 25%. Essentially, you're utilizing 25% of the available credit available to you, rather than maxing that card out. Because when you're maxing the card out, it can send a negative signal to some lenders that you might be becoming a little bit desperate in terms of funds. Now, the best time to be able to get money from the banks and lenders is when you don't really need it. That sounds a bit weird, asking for money when you don't really need it. But this is what we're doing here. What we're doing is improving the credit file, making the best possible place. So whenever you do need to borrow, the credit file is looking great, and that's really going to help you. So with 25% utilization, what you would do is when you get your bill each month, you'd pay the bill off in full. You clear the £250, so there's no credit that actually you're carrying forward. If you're able to do that, that will really help improve your credit score. If you are in a position where you need to carry credit forward the next month, or you're not going to clear your credit card bill in full, then I would suggest don't go beyond 50%. Try and keep it below. And if you need to, try and see if you can get a credit limit increase so your overall percentage utilization stays low. And as I said, these are the things that really help improve the credit score. Also, when you're making applications for any type of credit and the lender is carrying out a credit check, as we talked about earlier on, they're leaving a hard search on your file, a footprint there. Too many of these can also have a negative impact on your score, and you can start reducing the score down. So the suggestion would be not to do too many of these. It's better to make an application for credit, say in 1 month, and leave a gap of a few months before you make another application. Simple techniques like the ones we talked about can really make a difference in your credit score. And remember, the banks like to lend to those that don't really need the money. So if you can present your credit file in a way where it's presented the best possible light, because you've made sure all these things are being tweaked, whenever you do need to raise finance, you'll also get the best possible rates. Because remember, if you've got a nice, good credit score, or a high score, it means you'll get lower rates because you're seen as a lower risk to the bank versus those that have got blotches and problems on their credit file. What will happen with those? Sometimes they may get a rejection, other times they might get offered some kind of finance, but it certainly won't be at the best rates. They'll get unattractive rates. If you have found this video useful, then you might want to watch the video I've got lined up over here for you, where I talk about the things we have done in much more detail. And just before you do that, make sure you click on my face over here to subscribe to the channel to get more great content just like this. And I look forward to seeing you on this video just over here.